what are some things that people can invest in? And we're in America's heartland, and live cattle is one of the biggest commodities there.
Absolutely.
And so when we brought up the topic, people were just kind of taken back, like, huh? What? I'm like, well, these are the things that are around you. Like, well, yeah, you're using an iPhone. Yeah, you have Microsoft Word. Yeah, you might be driving a Tesla. Those are the obvious ones, right? But like, look at the world around you. Where do people go to work? Right? What are the biggest industries in these states, in Texas, in Oklahoma, in Kansas, in Iowa? What are the biggest industries there?
Yep.
Right? It's like one of those things that's in plain sight, but we kind of just are looking at it as an opportunity. But it's one of those things like, these are the commodities that businesses are thriving in where you live. New York City, probably not as obvious, right? Because we don't see it. But in the heart of America, these are the things that are thriving.
You have to look at everything that we buy, consume, or see. There's a company that is making money off of it. And if you look at the derivatives market, there's a way you can trade it to make money off of it. So like cotton from the shirt, diamond, silver, gold. That's when people are like, is something a good investment or not? It's like, it depends on time frame you're looking to hold. But everyone was talking about the egg crisis 2 or 3 weeks ago. Like, gold is a good hedge when the market is going down. There's always a way to like build a portfolio that allows you to hedge and make money in any market. And that's a sign of a great trader or investor. Regardless of what the market is doing, you are calibrated to win and have it to the upside. So put on gold, silver, palladium, live cattle, wheat, crude oil on your watch list on the commodity side, cocoa as well.
And in 2022, the best performing commodities were coal, number one, lithium, number two, which we spoke about the past couple of weeks, and nickel. Things that we don't think about, but obviously we brought them up. So just keep it in your mind, keep it on your watch list. Just be aware that these things are happening.
Let's talk about your thoughts on Oracle and corn futures.
Oracle is a legacy 1990s boring company, but when I was doing my research over the weekend, they've been pushing up a little bit since the beginning of last year. I don't think it's one of the sexiest companies to have. This is like, if you're older, maybe from 40 to 75. Oracle's like a safe company to invest in. I like it around $57.50. It should get back to $97.38 within the next 18 to 24 months. There's a lot of ways they've mismanaged the company and why they are not like a top 10 company in tech. But if you look at the history of the chart, I mean, of course, in the 80s, I mean, the 90s, it was at a super low price, like at $5, $10, right? But even going back to 2020, we were at $40.22. It's now at $87. Wasn't that much drawdown. And if I look at year over year, the volume is always steady. They have very few quarters where they end up losing or bleeding out money. So if you want a safer tech stock that isn't going to draw down your portfolio, that'll give you like slow and steady gains, this kind of like reminds me of John Deere a little bit. Like, it'll be slow and steady. You're not going to be able to tweet out that you got 300% gain, but you won't lose any sleep over this one. So Oracle is something I would definitely add to your watch list if you're a little bit older and you're looking for technology exposure, but don't want the erratic volatility of like a Meta or a Snapchat. So I like Oracle a lot.
When we talk about, and you brought up volume, I brought up volume earlier, is there a threshold number, especially if I'm a new investor, that I should be looking at it? Is it 1 million trades, or is it between 5 to 10? Is there a threshold that would be key for somebody who's trying to invest in a stock?
At least has to have 500,000 shares traded year over year minimum, at least. A quick tool though that people can use that I haven't talked about before. I think I talked about it at a live show last year. So you know how you can use Fibonacci retracements on a chart. You can also put them on the volume on your lower studies. So like, I like to buy, if I'm going to do off volume only, I'll go like the entire chart. And maybe, well, this is something I can do at the live show in Los Angeles. But when it gets to like the drop of 90%, so 10% off the low, I would want to buy it there and then ride it up for 4 or 5 years. So if you look at Oracle, the last time the shares was that low, like, was in 2009. The price was at $15. It's at $87.28 now. And also, if you know what those highs are based on your fibs, you'll know when you should exit as well. So if I look at ARKK, if you see what the volume has been high to low year over year, the volume is pretty of now for 2022 is back what it was in 2019. So, but if you come to the live show at Novo Theater, me, Troy, and Rashad, and special guests would be there. I will show you an illustration on how to use Fibonacci retracements on the volume to know when is the best time to get in. Back to you guys.
Yeah, maybe that's a session, right? We'll put the chart, an actual chart up, so people can understand the correlation between the volume inside of a stock,
Absolutely,
the relative strength, and the correlation between them. Because I mean, those are things when you just look at a chart. If you don't know, then you're just like, oh, okay, those are lines that are going up and down, and what does it mean? But I mean, they all obviously have a purpose, but understanding the deeper purpose for them, it makes you a better investor.
Absolutely.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.